I missed the button. I missed it. It was a long fade out on that one. Welcome back.
Ad.
Yeah, we've had that since the beginning, right?
I feel like we're always beginning with these. So.
Yeah, that's fair.
We're still
always
pretty
changing
new.
it. Yeah, so welcome back, episode 44. We have the guys from Methodbox today, and I'm very excited. I've been watching your channel for a while, and I was just talking to Justin before this. I'm like, every time I watch one of their videos, I'm like, my God, that must have taken like 7 months to put together. They're all like mini documentaries, make me feel horrible about my videos. But
Trey definitely talks about your guys' production quality. I think that was one of the things we did want to ask you, is like just how long it takes to produce something like that.
Awesome. About 7 months. No,
yeah, about
oh, okay, good. I was accurate.
It's a blessing and a curse. The amount of time that we put in, and it's funny that you mentioned that, because it's always that topic of conversation between the two of us creatively, is where on the spectrum do we find, on the producing spectrum, do we find ourselves? We don't want to overproduce, but we also don't want to, we have a standard that we have to live by. So it's been a tough road trying to figure that out.
It's a dilemma we still have to deal with every week.
Yes, but thank you for that. Appreciate the
no, I like I said, I enjoy it a lot. I know, like YouTube, it's weird because production quality doesn't necessarily get rewarded. It's more for the creator themselves, right? Like people, people watch my videos and they're like, "Oh, it looks so amazing," and I'm like, "Yeah, but it doesn't do anything except for make me happy."
It's all. Go ahead. There you go.
I was gonna say, you got to kind of think about the reason why people came to YouTube in the first place, right? It's because there was television, but they wanted a less produced, more real connection with the creator. So it kind of makes sense why channels like that thrive. And that's kind of the balance we're trying to find, is being more personal.
And I think we hit that. We got, so one of the things that we get approached by a lot, which we don't necessarily encourage, but it just happens, is people want to hire us as like a film crew to produce something. And like, yeah, that's cool. We don't necessarily want to freelance, but there's one person in particular who had a pretty big budget, and we're talking about like what the look's going to be like, and in a way they were hiring us as like directors as well. And I remember specifically, like, he wanted to go with a more like 30 frames per second video route, and we were immediately like, well, you got to do the 24 frames. And he brought up a good point. He's like, well, no, the 30 frame is the reason I suggest that, is because people immediately, when you take the production value out of it, people are, as Nathan was saying, just immediately more connected, because it's just like a raw, real thing.
Yeah.
Like, oh, okay. That's interesting.
Yeah, it is. It's funny how for a long time it was like big, great production quality, and now like there's certain areas, especially on YouTube, where it's like you need to dial it back intentionally.
That's right.
That's why I leave my sets just such a mess here. It's intentional. I placed all of these things.
Yeah, we'll just do like regular video calls throughout the day with Trey and myself, and they'll have this same setup. The backlighting, lighting on him. I'm like, okay, that's a bit of a step up for the Zooms, the Zoom calls.
And yeah, like you said, it makes it feel more like I'm a friend hanging out with my friend, where it's, you don't have to do everything up. It's just like an inside look into my world and my life.
Yeah.
So what's up, guys? You summoned us, and I thought it was for a very interesting topic. What do you guys have on your brains these days?
Yeah, so I mean, this podcast, anyone that's seen it before or listened to it before, is very random, goes wherever we take it. But I reached out to you originally because, well, as Justin knows, I've been obsessed with NFTs the last 2 or 3 months, and I know you guys talk a lot finance, and I was curious if you guys have been digging into NFTs at all, especially in the creator space, investing aspect of it. Like, there's a bunch of different ways to come at it, and I'm curious where you guys have gone with it, what you're thinking.
Yeah, I mean, for sure. We definitely have taken a dive into it. We've bought a couple in the past month or so. It's kind of crazy to think about. This was something that existed before, like a couple months ago. Like this was a thing that the crypto people were very fond of, and we're kind of going like, don't sleep on this. And now it's kind of hit the mainstream, even though it still may feel like it's an undiscovered gem in a way. Yeah, I think there's a lot of potential there for sure, and I think there's a lot to unpack with that. Those are just my initial thoughts.
So yeah, as you said, we explore finance, and we had a lot of creator friends, as soon as it started kind of blowing up in the mainstream, saying, hey, you guys need to tackle this subject. This is super interesting. This is probably like a month ago. And we're like, okay, let's start. We do keep hearing this NFT, non-fungible token. Let's look into it. And immediately we were just like, kind of like when crypto first came out, we're like, this is really technical. It's really complicated for the layman. We have to like wrap our heads around this. And, so we do what everyone does on YouTube. You start watching videos, and then with the lens of, okay, for one, we like absorb what this is, but then also what can we do with this from not just from a creative perspective, but also like, how can we actually make money at this? Because on our channel, we say that we investigate unique ways to make new money. And then we present the investigation to our audience. And then there might be something here for you to take away and go try for yourself. So one of the main things we realized is like, okay, there's two big takeaways. One is there's money to be made in the resell. Like you can actually go buy the whatever you can afford. If you could afford the Logan Paul stuff or the NBA Top Shop or whatever it is, go for it. And then see how much, like, Nathan used to do, was it like drop shipping? Like when you would go do Supreme and then you'd go resell that stuff.
That's just like reselling streetwear.
So like there's money to be made there, but then there's also like, well, we have a body of work. We have a catalog. Should we turn ourselves into NFTs? And if so, how do we even begin to explore that avenue? And also, what is there like an ethical line to toe with this? Because it's like we don't want it to just seem like
a cash grab.
Yeah, we're just like, hey, we just want some money here. You guys want to buy our shit? So trying to wrap our heads around that is how we kind of got started with it.
Yeah. I remember like it was maybe 3 weeks ago. It was like one of those things where I kept seeing this acronym pop all over social media, NFT, and I was like, what is this thing? And then because like obviously there's something here if so many people were talking about it, and then non-fungible token, what the hell is that? Like fungible, because it sounds like such a funny word. I remember trying to explain to Jonathan like the first day. You remember we were in the kitchen? I was trying to explain to him like this thing, and the first question is like, okay, but what's the value in it? Right. And so I think that's what makes them really unique, because I think it's the creator, the person whoever creates the NFT, that really gets to decide what you're getting from it. And there's so many different use cases for that. And we're only going to see like the potential that there is for it in the next however many years.
Yeah, I think it's crazy. I mean, it's a crazy time right now. Everything's an NFT, right? I don't think a lot of these things are going to stick around as NFTs or be valuable as NFTs. And then I think there's things that don't even exist as NFTs yet, like the title to your car or your home, that will be valuable in the future. Like I would be surprised if when I bought a car in 10 years, it wasn't some sort of blockchain based certificate rather than this like piece of paper that I get from the state of Connecticut that I always lose and then have to pay $50 to get a replacement of. Like those are really good uses for NFTs when they solve a couple of other issues, I think, with blockchain. But I think the creator space and the music space are two that we're going to see a lot of movement on in the next couple of months. Then the art space, we've already seen a lot of movement on, and that's kind of where I've spent a lot of time. And I think it's just fascinating. I kind of got into it about 2-3 months ago, Justin, as I was like, I just quit my job, but I've been looking for my next company, my next startup sort of idea, and NFTs are like top of the list right now. So I've gone super, super deep on those.
Yes, Trey has gone very deep. That's the way Trey does things. He'll pick something up, and it's almost like he does, what was it, Malcolm Gladwell, like 10,000 hours or whatever it was to, like really become a master professional of something. I feel like Trey crams that in about 2 months with something. So I feel like he's done that. He's done that with NFTs lately. And like, I know very little about NFTs. I'm not afraid to admit that, because I just know very little. I have not carved out the mental time to ride the train of learning about NFTs lately. But when Trey started talking about things like, like car titles, house titles, those applications, that's when my ears kind of perked up, because I can see, I mean, talk about like the DMV and handling titles right now. I purchased a vehicle during quarantine, and it took 2 months of just exchanging paperwork with the DMV to actually get the title. So it literally just like mailing things back and forth, because I couldn't go into the office. So when he started talking about those types of applications for NFTs, I'm like, that's where I could eventually see this going. Now, how a government agency would implement this, I don't know. Maybe that's another problem to solve, but I think that part's very interesting about the future in NFTs.
So I have a question for you, Trey. As far as like something like real estate or cars, what would be the purpose of having it as an NFT? Is it because you are able to like very specifically see that this is you own this?
It's verified on
It's
the blockchain.
verifiable?
Yeah, it's verified on the blockchain, but I mean, like, titles are that way already. It's just government backed, right? I think the big reason for moving over to this is a reduction of overhead. You know, the overhead, like Justin just mentioned, on getting a car title is ridiculous. And I think like moving things like car titles over to blockchain would be mostly led by the DMV themselves, because they would see the value of like, oh, this is actually going to reduce a lot of overhead. But then reduction of overhead isn't necessarily always a good thing in our capitalist society. Like reduction of overhead in purchasing a house, for example, like if you put the title on the blockchain, well, then you would just put a whole industry of escrow companies out of business.
Right.
Yeah.
Trey,
And
is
so
this
there's going to be pushback. Yeah. What?
is this something that you have? Is this an original thought, or is this something that you've discovered while doing your research of NFTs?
No, I mean, it makes like
thought.
logical sense. I've heard Andre talk about it Andre Jick
Yeah.
talk about it a few times. There actually is a company already. I haven't done too much research into them that is trying to do like house titles on the blockchain. I don't know anything other than that about it, but I would be surprised if it doesn't exist. But I think like one of the big headwinds that crypto bulls in general don't like to admit is that like government and corporations don't like to change because they don't like to lose their money. There's a lot of money in the nonsense that is purchasing a house right now. You know, I was actually interviewing with a company based up in San Francisco that automated a lot of the closing process. And there's like 7 different companies that are constantly interacting and exchanging money and taking fees during the purchase of a home. And like this sort of stuff would eliminate a lot of that. So it's like, who's going to win the battle on a lot of these things?
That's a whole other approach that I didn't even think about was possible with NFTs, because you know our minds are just like investing.
Mhm.
Is it worth investing in this thing or investing in things that are backed by this thing? But this is like a whole way of just no. What if our business model was based on this like framework that uses this, and then we can reduce overhead? That's like, oh, okay, that's cool.
Is there a way to invest in the technology as a whole, like the idea of NFTs versus like I'm specifically buying this people artwork, you know, or you know what I mean?
Mhm.
Like, would it be investing in Ethereum? Would that be the?
That's
route
what I
to
do.
go?
That's what I do. So my crypto portfolio is half and half Bitcoin and Ethereum. Bitcoin because I think it's a good store of value, and it's like that's what they want it to be. You know, some people talk about it replacing the dollar. It's never going to do that. That's not what they want it to do. Ethereum I invest in. I think it's going to appreciate quite a bit, but also like it's kind of weird being a fan of Ethereum and wanting it to appreciate, because as I'm sure you guys know, the gas fees are paid in Ethereum. So the more expensive that gets, the more expensive transactions get, which lowers adoption. That's how I'm doing it though, is I'm investing in Ethereum itself.
Today's definitely the day to buy, by the way, if you didn't already know. It's
Oh,
been a bloodbath today.
Yeah. I
I
saw that. I was just talking to a friend of mine that I'm working on a crypto project with just before this. And I'm like, gas prices are so much better today than they were yesterday. Of course, I bought an NFT yesterday, but
Yeah.
Oh,
That's how
dang.
it's like you'll go on OpenSea or something and you'll see an NFT that's selling for like
Mm-hmm.
0.001 Ethereum, and then you'll go to buy it and you're like, oh, I have to pay all these fees, and you know.
yeah.
So
Yeah.
it's
By the
not-
way, Genki says hi. I bought one of his NFTs yesterday. I had a call with him and I bought one of his, and yeah, it was just like that. I paid 0.05 ETH for it, which is like, $50 or something like that. And the gas fees were like 48.
Jeez.
It's like,
Get an NFT. That's cool.
I just did my first Ethereum purchase on BlockFi. I'm now
Oh.
in Ethereum. Now that you
Nice.
mentioned that, I was like, I've been meaning to buy. And now
you
that I
just did
see
it,
it's down.
just now?
Yep, just
Yep.
did it on
All right.
BlockFi.
Now's
Nice.
the time to do it.
good job.
Yeah.
We have another Ethereum investor now.
This is not a live trading show. I just wanted to do it while I thought about it.
Yeah. Honestly, everything is everything. Now's the time to buy everything. Everything's super red. Right now.
Yeah, it's not the time to be holding it according to my portfolio.
Yeah.
No, I mean tomorrow, the next day, later this week, next week, it'll be green again. So it's just a good day to buy.
Yep.
But
Sure
so
is.
speaking of buying, so have you guys purchased NFTs? Are you in the habit of doing so?
So I just bought my first NFT, Genki's, yesterday.
That was your
Um,
first one.
I've minted a couple of my photos, one on Mintable's gasless thing, and then two with their normal traditional one, just to learn the process.
Was
My
that
struggle with buying NFTs right now is I don't have like a good framework for figuring out like who's actually going to have value in the future.
Right.
Outside of like the big names, like Beeple, for example. He was a well-known artist leading into NFTs, and so like that made sense. But the entry cost there's, I mean, I don't have $69 million laying around, so.
yeah.
But
Like,
so like, and there's so much being created that it's hard to sort of narrow it down and see like what actually does have value. And a lot, because of like all the hype around it, everything's so expensive right now. Like it's a fairly high entry cost for something that I have not a ton of conviction in the future. So I haven't really got into much because of that.
It's a catch-22 in that you're supposed to invest in early, as soon as possible, be an early adopter to a lot of these like early creators before they get their careers going or wherever you're buying from. But at the same time, you're not really supposed to buy when there's a bunch of hype on something, because that's usually when you're at peak buying prices.
Oh, right.
So it's like, what do? Do you just wait it out? And it could be very well be the case to wait it out, because we could be in a hype bubble, because in a way you're kind of investing in the entire idea of NFT versus a particular NFT. It could all just blow up and we're like, that was stupid. We were actually doing that for a while, like buying these things.
Yeah.
Or maybe it is the next big thing. It's a
and so I think most of my investment in NFTs is actually going to be in investing in building a software company around NFTs, rather than actually buying the NFTs themselves.
So that's the business that's where you're coming from it with.
Yep. Yeah. I'm looking at a lot of software solutions to the space, because right now the space requires you to be very technical. And there's also some fairly large gaps, I think, that are missing right now. So I'm kind of approaching it from that angle right now.
Yeah. I'm not invested at all. I take the mindset, like, I don't invest in what I don't know. So I just don't know enough yet to jump in.
It does feel like if shit were to hit the fan, NFTs would be the first thing that people pull their money out of like, versus like stock market or Bitcoin or like any of the other things, because those have more of an argument for holding like actual value versus like the NFTs. Like Jonathan was saying, it could be a thing where it's like we're actually paying for those. But I think what's interesting is when you see artists like, for example, Kings of Leon, they just, and you might know this, that their NFT, if you own their NFT, you have the right to be front row at one of their concerts.
Yep.
So it's like the artist is assigning the actual value to it. So then that almost like, the argument of it's invaluable, it starts to question that. So,
to play to that, I think in our research of it, when we were watching a bunch of videos on it about a month ago, so one of the YouTubers that we watch, Colin and Samir, I don't know if you've heard of them.
Yep.
So they had put out a video just like, what is this thing? And one of the insights they had that I thought was pretty cool was, if we could take this to a place where there's like a membership, or if we could treat it where it's like a stock, where people can, kind of like you were saying, Nathan, people can have stake in that stock, and then they can now kind of guide the artist. And here's what we want you to make. We're like a board team of like board members, and it's just like, wow, there's so many possibilities with this.
Yeah. I mean, for that concept, look into DAOs, DAO. I don't know if you're familiar with them, but they're decentralized autonomous organizations. They're like a structure based on blockchain for basically running an organization through token ownership. So like the Compound protocol uses that. So if you lend or borrow on the Compound protocol, you earn comp, which is their token over time. And when they have new platform changes, they put it up to a vote to comp holders. So like Andreessen Horowitz, a big VC firm, they're one of the biggest comp holders right now. So they get to drive a lot of that. But I could see that being very interesting in that creator sort of space. That same podcast, Colin Samir, that you're talking about, got me thinking about, like, what if NFTs existed back like when Mark Cuban was getting his start, and he needed to raise some capital, so he issued a whole bunch of NFTs that were like good for one lunch with Mark Cuban. Imagine how much those would be trading for today.
Yeah,
and right. I think that sort of thing is going to be very interesting in the creator space. And if you're familiar with the company Upstart, like one of their like early value props was they'll loan you money based on what they view your future potential as effectively. I don't think that's quite what they do now, but I think you can see a lot of that potential in the crypto and NFT space. You know, I could imagine having like bought a Cody Warner token back in the day, back before he like did his Peter McKinnon collab. And
well, there was that question that would pop up from time to time on Twitter or like among friends where it was a simple question. It's how can I invest in a creator? And it's just like, oh wow, this kind of just solved that dilemma.
Yeah.
You know, it's like you can. Turns out you can.
It feels like we kind of already are treating it like that when we're buying an NFT. Unless, for example, like I go on some website like OpenSea where I go and buy an NFT, and like I'm going check out the person's Instagram, you know, see their artwork that's backing this creation that they made, and you're essentially, unless you are buying the art because you really like the way it looks, you're really buying it because you believe that they're going to grow even bigger, and you're investing in them as a creator. So it's essentially like the same thing, right?
Yeah. I think the way I kind of view it is like in real estate. You have appreciation focused investing, and then you have cash flow focused investing. You've kind of always had the appreciation focused investing where you could buy the art, betting on the artist getting bigger in the future, and it's going to appreciate in value. Now we have the potential for cash flow based investing, right? Like imagine you could buy that Cody Warner token, and with that you got rights to a percentage of his YouTube AdSense revenue or something like that.
Right. Yeah.
And then you're actually generating cash flow by investing in another creator.
In a way, it's like a dividend yield.
Yeah, exactly.
Yeah.
Right.
Yeah.
Really,
I mean, and then so it's like in order for us to have this conversation, we have to have like this basic understanding of it to be able to see even the potential behind it, and to then move forward with more ideas to further progress this. And yeah, I just think it's such a complicated thing for the even just understanding the blockchain. Like you just have to get, that's the barrier of entry, like base bare minimum to even begin to understand this, you know, and a lot of people don't even know that.
Yeah, I think like I constantly have this feeling of like, oh my God, I'm behind the ball in this whole space, and like there's no way I can like jump into this right now. And then I go and try and mint something, and I'm like, oh my God, I'm glad I'm a software engineer because this would have been impossible otherwise.
Yeah, we're gonna have to pick your brain. So we're doing 2 videos. It seems like one of them that we're doing upcoming soon, if not our next video. Well, actually, I think it is our next video. Is the resell of the NFT and how we can make money at that. So we've been doing some NBA stuff, some Logan Paul stuff.
Okay.
But yeah, if we do decide to make that second video where we turn ourselves into an NFT, some of our body of work or whatever it is, or anything else we create that's more like a Patreon, like this is completely different than what you've seen. We're gonna have to pick your brains on how to mint. Because I don't even know where to begin with that. Yeah,
I've been spending a lot of time on that lately. It's one of the platforms I'm working on right now is actually going to need to mint NFTs. And I think like one of the biggest barriers to people minting NFTs right now is gas. And there's platforms like Mintable and OpenSea that offer gasless minting. And then the gas is paid on the purchase or the transfer out of that contract. And I'm still trying to understand how the hell that works.
So Justin, based off of, it seems like you're a little bit new to the. So, what do you make of everything? Whether it's buying, minting, what does your instinct tell you about the future of this, or for the common person, what they can make of this?
Yeah, and very much so. I am the common person in this case. I think I probably know the least out of this group. Like, I know there's something here, I just don't know what, and I think that. Kind of what we were alluding to earlier, like there's a bit of a bubble, or like, you know, people are just all diving in and not really knowing exactly kind of like what they're buying just yet. So, but when you, like what I alluded to earlier as well, like when you start talking about things like contracts for houses or cars or other assets that we are very familiar with nowadays, like that's where I'm interested to see where the technology goes. I think it's going to be more people like Trey and you guys that start to collaborate on these things and figure out like kind of like what are the applications that people just aren't thinking about yet, because it seems like everybody's just focused on maybe like the art or the creator side right now, and not like everything outside of that.
It's the more poppy, it's the more like attention grabbing side of it.
Yeah, and like I work in marketing, and I kind of I allude to marketing as just like, grabbing people's attention and then delivering value. It seems like all the attention right now is on like the poppy stuff that that we're talking about, but the real big value and potential money, I think, will be in applying this technology to some existing, maybe inefficient processes in our society or economy.
What you're doing, Trey, is while all this is kind of going on the surface, you're trying to figure out how to build a business on the application side so that you'll be ready to go when this does take off.
Yeah. So like my last startup was in the cannabis space. So it's 7 years ago now, Justin, right? I think
that's where we met. Yeah.
And so where we were 7 years ago in the cannabis space, there were a million options for what you could build, because it needed everything, and honestly still does need a lot of things at this point. And like the people that failed were the people that tried to do everything. So my challenge right now is focusing on one thing, because I have like, just from this conversation, I have like 4 different businesses that we could start, right? Like we could start a Patreon based on blockchain off of this conversation. There's like an escrow service that I was brainstorming earlier where you could actually escrow physical art with the NFT, which I think is going to be a challenge for some of the more physical artists, or think even like that car example for example. So yeah, I'm trying to figure out the right best place to start. Honestly, the best first place to start, I think, is going to be in the more poppy area, but bringing it more mainstream.
I feel like that's a big question for you, because in a way you're going to be investing. Once you go down an avenue, you're going to be investing your time. That's an investment. You could be, hopefully this is the thing that I'm putting all my money on right now.
Oh yeah. It's a massive investment. The last company I started just sold like last week.
Wow.
So it was like, it's a long journey.
Trey, how many companies have you made and sold?
Just one now.
Oh, okay.
Yeah.
Which is
I've been at startups. I've been at startups my entire career. So I started out at this company called Outright. Who my co-founder of my company was the founder of that company. He sold that one to GoDaddy, and then we left and we started that cannabis thing. I was there for like 6 years, left, and then like 2 years later, they've now sold to another party in the space, who then raised at like a $1.7 billion valuation, which is crazy and awesome and good. But now it's like, what's the next thing? And I like the NFT space for me has a lot of parallels to cannabis 7 years ago. And it's very exciting for that reason. So,
yeah.
So, I watched your recent video, and I'm curious about your general stock market investing. It sounds like you
started the worst time, man. I picked the worst time. The best time would have been a year ago, exactly, which was what I thought, which is what my instinct was when everything crashed with the pandemic. But it's been so volatile. Basically, as soon as I bought in, it's just been up and down, which is great if you're swing trading. But a big part of this experience has been just learning about that world. Just like this NFT world, there's so much to explore and research on. You're not really into stocks. Like, you don't really know it until you got some stake in the game and you're actually playing and looking at it. I mean, I'm waking up at 2 a.m. looking at my portfolio, looking at when the best time to buy, because you do want to take advantage of the swings at this point. And I've already grown so much in the last month, because I was a complete newbie to stocks, and I already feel like I get it after a month of being invested in it. But yeah, I think as far as that like upward trajectory that the year that 2020 was, and first part of the first Q1 of 2021 was taking, it's over at this point. Like we don't know, maybe in a couple of months that we will see that it's still kind of going up, but it's all good. I think it's a life decision. You're going to be in it for life.
Exactly. Yeah.
Stuff. So I've learned to kind of just like let it happen and not let my emotion. It's very much like, is this going to control how I feel today? Whether it is happy or angry or whatever. I've learned to, kind of get over that at this point.
That's good. Justin and I actually really started, like, I've been playing around with the stock market here and there for a long time, but we really started investing just before all the craziness in March. And then I took like basically any line of credit I had, and I put it in March, the week before the bottom, which was looking back, it was like the best timing in the world. But now on red days, I'll be like, "Oh, dude, did you see the market today? Is down. It's down like 1%, 2%." He's like, "Did it hit a circuit breaker? No, not a bad day."
Yeah. I'm so conditioned to what happened last March. It's like people are like, oh my God, it's down 0.5%, or my portfolio is down 0.5% or 2%. I'm like, did it trip a circuit breaker? Is it really down? Because it's going to go back up.
Yeah,
it was quite a time to learn.
I think we're at a point now where there's so many dips, like a dip within a, and then a dip within a dip, Inception over here, that you're really kind of just like banking on, is this the best dip to put my money in right now? Because it could go down again. And then I think on days like today, where it's just a bloodbath, you're just like, man, I wish I just had some more money today to put in, you know?
More margin.
Yeah.
More margin.
I don't have any more.
Yeah, you got to worry about those margin calls.
All my margin went into our last real estate property.
Yeah, and real estate, by the way, it's still been holding up during this.
Oh, it's been doing great. We closed on a property in November and then one in January, and they're both up 10% since then.
Jeez,
It's like that's insane. And then leverage, it's like a 30% return so far.
Yeah, wow.
Yeah, I mean, real estate is like the investment. You know, it's like you take your little bit of money and you can 10x it. You know, you control this much more money with this little amount of money. I actually just got a job as an assistant real estate agent, and
nice.
Yeah, and the job is like helping the agent, you know, do the showings, like make appointments, do the MLS, like find houses to actually show. And we've been working with this client for like 6 months now, and like every week we're going out, like on average maybe like 3 to 4 houses a week that we go and visit, and they probably put in at this point like 10 different offers on different houses, and each one they just keep getting outbid just because there's such a seller's market right now. All sellers, it's like they get an average of I think it's around 4 offers per house, and it's just insane because you see these sky high prices, and you think it's like it can't get much higher, and it just keeps getting higher and higher. So yeah, it'll be interesting to see what ends up happening, whether it's you know, like I don't know if like Corona has anything to do with like the lack of supply of houses on the market right now, like people don't want to sell, or there's like people are wanting to get in now, and like, you know, interest rates are so low that there's so many buyers out there. I don't know what it is, but it'll be interesting to see what ends up happening after all of this.
Yeah, I mean, we definitely saw a lot of that when we were making offers on houses. We learned that if we don't get an offer in on a house at or above list within the first day, we don't get the house.
Yeah.
So like our second house, we only got because it's next door to our first house. And my dad, who does all the on-site property management, happened to talk to the owner before they listed it.
Oh, wow.
So like that's the only reason we got in on that property.
Game though with real estate, you have to see those opportunities even before they come. Yeah.
Not nowadays, you got to start with like your highest, like whatever the highest you're willing to pay.
Exactly. Yeah.
Serious.
Yeah. And honestly, it's just easier that way. You don't have to worry about, you don't have to go back and forth on the negotiation because you're actually willing to pay more. You're just like, this is the number, take it or leave it. We'll make another offer at the same time and move on.
Well, the stakes are so high when you're playing that offer game, because as soon as you say no to their offer and then you counter offer, you basically eliminated their offer. So they could just immediately go, okay, next person. So you had it and then you lose it.
And then you fall into that emotional game too, where it's like, you're negotiating and it's like, oh, just a little bit higher. And then I think we'll get it a little bit higher. And then I think we'll get it. And then all of a sudden your spreadsheet's like, bro, you couldn't go any higher. You're losing money now.
That's the exact same mentality that I'm learning with stocks. It's almost like a don't be greedy. Like if my instinct is I should sell right now. It's like, but I could make a little bit more for this. Like, just sell it.
It always turns around when you think that.
The other day with Tesla, I missed that swing. You know, I was like, it almost hit 700, and I'm like, just a couple more points, and then immediately, I'm like, well, it's probably going to go back up, right? Nope. Yeah. I totally missed that swing. It's like 2 days ago.
No matter where you hit your stop loss, it'll always hit that, and it'll never hit your sell order. It's just that's just the rules. It'll miss it by a penny, but it'll hit your stop loss even if it's like within $10.
Yeah, for sure.
It's the same thing when you're buying too, or when you're trying to sell.
You know, so I have a question for you guys about stock related. So I recently watched an Andre Zick video where he was talking about is there the perfect time to invest in stocks? Like as far as the calendar year or the day.
Yep.
And I guess statistically there is. Apparently, like over the last 100 years, people tend to pull their money out of the market in May and really don't put it back in until November 1st.
It was a very interesting video.
Oh, you watched that one?
Oh yeah. I watch all of this. I watch all of their videos.
Oh, okay. Yeah.
Except for me, Kevin. I don't watch all of his because that's impossible.
Right?
Yeah, so that's kind of part of our homework too. Not only do we like appreciate the finance world, but we're in it, so we have to kind
Right.
of
Yeah, exactly.
But it got me thinking, with all this volatility and people freaking out about the inflation rate, which is what is causing all this volatility. I think every time Jerome Powell speaks, it's like the market tanks, even though he's like, dudes, it's going to be cool. Inflation is fine. It's going to be temporary, but it'll even. So I think though that I'm like, should I pull out like for a good 6 months or so, like right before May? I'm thinking like let the market bounce back and let's get to like close to an all-time high again. Just pull it all out and then let it do its thing for 6 months. Are you guys kind of thinking the same thing, or are you going to write it out, or what?
Honestly, I don't think we're the people to ask. Like I treat my stock portfolio as just a high yield bank account.
Yeah.
Like I keep it in there. I like getting the leverage against it to use for other things. It grows more than my bank account does typically. And that's just kind of how I treat it.
Great way of looking at it.
I don't do a whole lot of timing. Like all the analysis that like Jeremy and me, Kevin are doing, like it just bores the hell out of me. I'm not into that. You get me into like startup and angel investing, like that's a whole nother story.
Yeah.
But the stock market is just not super exciting to me. I play around with trading the futures market sometimes when I get bored. But other than that, I just kind of pick the companies that I think are great. Also have some index funds in there to diversify it and just put money in regularly.
Yeah, I subscribe to the dollar cost averaging method. I just put money in really no matter what. It makes it kind of easy because like I guess right now, I work for another startup in the healthcare space, and I'm helping, it in a big part in the marketing department. So most of my time goes to the helping grow that startup. So I don't have much time to go and try and pick stocks and those kinds of things. So as far as timing the market and that stuff, like eventually I do want to understand more about the stock market, actually be very much like the gentleman you guys interviewed in your most recent video. I also just love that he smoked a lot of cigars too, because I'm very much into that too. I saw that lounge and I was like, fuck, this is my future, man.
We were there for a good hour, by the way. Yeah.
Yeah, that looked great. I was watching that. I was like, oh, I want to be there so bad. This guy's talking about his investment thesis and he's smoking cigars. I'm like, this is me.
That
and
guy,
my girl,
the guy who had that line in the cigar lounge that we gave him like one line. He's like worth like 5 million or something. It's like, casual 5 mil. I'm like, okay, you're among good company at cigar lounge. Like
but yeah, I just dollar cost average at this point.
You were gonna say my girl. I was curious as to where that was going.
Oh yeah, she jokes around and calls me like a 70-year-old man because I like my whiskey. I am pretty much. I like my whiskey. I like cigars. I go to bed early. I like reading.
Right.
My perfect vacation is like basically those things and reading a book in a quiet space.
There you go.
70 years old.
I think right now where we find ourselves mentally too, besides stocks and our whatever investigations we're doing right now, it's NFTs, is just more real estate. Where's property number 2 going to be? Or are we looking into Vegas? We have some interesting stuff coming up, which is going to take us to Vegas in the next month. And
nice.
Yeah, I think it's going to be worth exploring. I don't know if there's money to be made because right now in Henderson, you can buy like a really nice 4-bedroom, 2-bath for like $350, multi floors, like bi-level. And you're like, well, yeah, this is cool, but like, what am I going to do with it? Because I think the topic that's always like, or like the idea we always flirt with is like, oh, can we? This is I think who gave me this idea? It was Ryan Pineda. It's like you can have a property in Vegas and have it be your residence, and then have mail go to it, and technically you're a Vegas resident. And then if you want to live in Los Angeles still, like we do, and then but you don't want to pay the taxes, the California taxes.
Yeah.
So it's just like, well, is it worth it just for that? Because like a $350, like mortgage probably isn't too crazy on that. Maybe it's like
especially if you get like if you put 5% down, it would be the mortgage would be higher, right?
Yeah, right. Well, yeah, right, because you'd be paying PMI.
But
yeah.
I mean, that might the whole no income tax could make that worth it. So what would the case be that we just spent all our time here in LA.
It's a whole, and that's like I said, is where we find ourselves. It's like kind of thinking about those things. It's like, is it even worth it? Like, would we Airbnb it? Would we rent it out? Then if there's like another residence, and anyway, that's kind of where our headspace is these days.
Yeah, and then you got to just make sure that you're managing to avoid the whole California still classifying you as a resident. You know, I don't think California's gone quite as crazy as New York. New York has an entire department dedicated to basically finding people whose address is in Florida, but they actually live in New York.
Oh, whoa.
Because it's so common because the tax rates are similar to California, and that's just what everyone does. I mean, even here in Connecticut, like half the license plates on the road are from Florida.
Really?
Oh,
yeah. So it's like you have to be careful there if you get there too. But like if that works out, that'd be fascinating and amazing. And maybe I would do that from Connecticut.
yeah, for sure.
But yeah, I mean, we invest in similar houses, like 3-bedroom, 4-bedroom, or about what we pay for these two, like $260 each,
right around there. Yeah.
And they're barely cash flowing, if anything, but the appreciation in that area is amazing. And I think Henderson's very similar. We've looked at that area quite a bit, and I would be surprised if in the next 5 years we don't expand into that area. But
yeah, I mean, for us, it's a 4-hour drive. I think that's the that's the hook for us. It's only 4 hours. I've been driving to the Bay lately, which is like a 5-6 hour drive. It's so doable. It's you could do it on a whim. Hey Nathan, you want to go to Vegas tonight? Go stay over at the other place.
Yep.
Just make the drive.
I love that mentality. I'll see you guys there.
Always yes to that question, by the way.
Yeah, that's always
even from
yes.
Connecticut for me. It's always yes.
Burst through his door. He's like in his underwear on his phone. Vegas? Okay, let's go.
Yeah, I'll always be a yes to that.
Yeah.
So you guys spend a lot of time looking at sort of different ways to invest. Something I'm interested in talking with people about is angel investing. Have you guys looked into that much?
I haven't, just because I know you need like a substantial amount of capital in order to like get taken seriously when it comes to that, like at least 50K from my understanding. I want to though, because I hear that's like the best way to like grow your wealth really fast is like getting in at the bottom of like.
So two things. One, you don't need a lot of capital. You do need to be an accredited investor.
Okay.
So I guess you kind of need a lot of capital.
Yeah, you do need just to start, but not to actually invest.
Yeah,
is that a magical certificate to be an accredited investor?
No, it's over $200K a year in income or over $1 million in net worth. But it's like you check the box yourself. So as long as you can convince yourself that it was legit when you check the box, then that's fine.
Now,
but as long as you're an accredited investor, you can go on, like this is how I'm doing it right now, through like AngelList. You can join syndicates. And you can invest in a company for as little as $1,000.
Oh, interesting.
So what's the difference between that and stocks? Is it that they're not public?
They're not public and they're not liquid. But the upside is huge. So take the company that bought my company. They've raised 3 rounds over the last 3 years. And in the last 3 years, they've taken their valuation 20x. And that's not super uncommon for private startups.
So who does what is the service that AngelList provides?
Naval created that.
Oh, really?
Yeah, he's the one that created AngelList.
Oh, that guy's super smart.
Yeah, he's super smart. So AngelList basically allows like leads or VCs or whoever they are to create a syndicate. So what a syndicate is, it's a group of investors that invest as a single entity into a company. So I'm part of a few syndicates. So deals pop in, I can review them. The nice thing is those people that lead them typically do most of the due diligence because they're investing alongside of you. So it's a little harder to go wrong there. And you can choose to invest or not $1,000 and up. My goal is to invest $1,000 in 10 companies this year through that. And then, the downside is you have to pay a little bit more. So there's like a 20% carry to the lead, which means basically 20% of all the gains go to them. So you don't get as much of the upside, but you still get a lot of the upside and you're able to get in for much lower. And like the hard part about angel investing is the deal flow and the due diligence, right? It's very hard to get in to some of these deals because most of them are going to established VCs, established angel investors. Unless you have that brand or those connections, you really can't get your foot in the door. These syndicates get the foot in the door for you and you join with them.
Now, is it because they like the company, said company, they like you're basically saying here, I want to give you money. Like you would think that they would be like, yeah, okay. So is it because they know that they would want to come back to you for more money, or is it like if I'm going to partner with somebody, I want to partner with somebody that's going to like in other ways help our company? Like,
so
why would they take you down?
Yeah, it's a little bit that last one. So they want strategic investors, people that will look good in a press release, people that will be able to help you with problems. There's also a lot of overhead in just taking capital. There's also the desire to keep the cap table as small as possible. The bigger the cap table gets, the worse investors look at it in future rounds. So they're looking for larger investments from a fewer amount of very strategic people. That's just generally how a startup's looking to raise. So like someone like Jason Calacanis on the cap table is great. Now Jason Calacanis has his own syndicate. So he's on the cap table and he didn't even have to put all the capital in.
Yeah.
So in order to get on one of these syndicates, do you need to qualify as like a legit angel investor, like you're saying, where you have to have a $200,000?
Yeah, you have to check the box that you're an accredited investor.
Okay.
It's literally like you have to check the box.
Does anybody check that, or is it like you could just check it and like not have to be worried that you checked it and you're lying?
I don't know definitively. It's probably not a discussion for a live stream. But I'd be happy to talk about it after.
Yeah, you check the box.
Got it.
Hang out after the call. We'll talk some more about that.
No, that's interesting. I think obviously there's a theme here of overall investing, but whether we're talking about NFTs or we're talking about stocks or we're talking about angel investing, but it's really just, do you have conviction in an entity that you're willing to put money towards early on? And I think there's something interesting in that because you're wanting to see the ROI that people talk about. And also how much can you, this is something we talked about in our last video about, what is my ability to X in that? You know, I want to see a high return quickly. You're kind of, I mean, I'm definitely got my ears perked up with this conversation about angel investing.
Do you guys have a preference?
Read the book Angel by Jason Calacanis. It's like a very easy, quick read, and it's literally a how-to guide on how to angel invest.
Cool.
I was going to ask, do you guys have a preference? Like if you had $10,000, would you rather invest it in the stock market or invest it in like one of these private companies? If
my goal was like net worth generation, I'd put it in the private companies, hands down, for me.
Yeah.
Just because you think the return is higher.
The return is higher. I think my ability to pick them is better too.
Yeah, I could see.
I think like my knowledge and skill set and background is in starting tech companies, and I think my ability to pick a good product and a good team of founders is better than my ability to analyze a GAAP accounting financial statement.
So on this site, AngelList, do they have all these? I would imagine like all these companies are up there and that like are offering, here's us, here's our pitch, and then. Is there like a breakdown like where you can kind of analyze what they're about and you're like, okay, yeah, I get it. Is that how it works on that site too?
Yeah, most like you'll see a deal pop up. Normally it has like some sort of timeline that you need to invest by. Some of them are like same day, some of them are like a few weeks. And then you normally get the pitch deck, which is the deck that they sent to the angel investor to pitch them on the deal. Sometimes you'll get some additional information. Sometimes the leads will do like follow-on calls with some of the founders to get more information. Most of the time, especially since I'm only making $1,000 bets right now, I'm basing it off of the pitch deck and some research into like I'll go and try the product if it's live already, or I'll dig through the product, and then I will dig into the background of the founders.
So it doesn't have to be a company. It could be a product. It could be like the GoFundMe people, the Kickstarter people of like, we made this thing, here's a prototype. You could find us on here if you want to actually invest in our company.
No, it's a company.
It's a company.
It's a company that's typically anywhere from seed to Series A that's trying to raise some more capital.
And as far as like, what if it's a company that has products, like specifically like movies? Let's just say, I got some movies I want to sell. we're ready to go with them. These are products. This is their company name. Is that an appropriate place to go? AngelList.
Well, as the company, they don't explicitly go to AngelList. They're going to the Jason Calcanis or the whoever lead and asking to raise money. And then Jason Calcanis or whoever, Jason doesn't actually do his through AngelList anymore. They're using the syndicate that they have set up on AngelList. So AngelList is more of a platform for the syndicate leads and people that want to invest in the syndicates rather than the business themselves.
Got it.
If that makes sense. And basically all of these companies are software companies in some form. So like I've invested in a wine investing company, which I think is a interesting space in the future. Let's see, what else have I invested in? I invested in a company that was basically Twitch, but for fitness streamers.
Oh, nice.
So especially like during the pandemic time, it's like doing fitness classes online. I think it's going to be very interesting. And like 3 others. I don't remember what they are right now.
Well, you've got the one that I really like.
Oh yeah. There was I can say that Content Fly. They were raising, and we actually used them for generating articles on one of the websites that we created, and I saw them pop up, and Justin has spoken nothing bad about them. So I'm like, oh well, obviously I need to invest in them.
I didn't know how they made money because I thought it was too good to be true, but it looks like they are making money.
So how long does it typically take to get your ROI? Is it like a couple months? Is it a few years?
No, it'll probably be 5 to 7 years.
5 to 7 years.
Okay, yeah, so most VCs have a 5 to 7 year time frame.
Got it.
So they're typically looking for liquidity in that 5 to 7 years, and then there will probably be a couple more rounds within there. So some of the more high growth companies, they're raising every year. So like these companies that I invested in at the end of last year, maybe the end of this year, they're going to be looking for more. And if my syndicate got pro rata rights or the ability to keep their same percentage in the next raise, I'll have the opportunity to put more money in. And that's the goal, is put $1,000 in, double down on your winners on every round that you possibly can. And then hopefully there's some sort of liquidity in 5 to 7 years.
What happens if a company that you invest in decides to go public?
Then there's liquidity.
Gotcha.
And then
that's the holy grail.
That's the company. That's what you're striving for, is what you're saying.
Yeah. So there's like a couple of different ways you can get liquidity. Is really just like an acquisition or going public.
Got it.
Those are kind of the two main methods. There's also the ability, well, not in these syndicates, but like I privately hold equity in my company. There's the ability to do a secondary private market sale of those stocks, but it's not easy.
Gotcha.
What was the name of that book that you said?
Angel by...
I think it's just called Angel by Jason Calcanis.
Oh, okay. All right.
Cool. Got it.
He's a very famous angel investor, investing very early in Uber.
Nice. Noticing the title, I could only see part of it. Confronting Methodbox about this video.
NFTs, maybe?
Okay. I love
I wrote it yesterday.
Confronting.
I had to steal that from Meet Kevin.
Yeah. Well, also,
I feel like every CEO is interviewed in the last few weeks has been like confronting the CEO of Voyager. He's like, hey, it's great to have you back this time.
Yeah. Right.
You gotta get this click.
Yeah, I think Graham started that.
No, he came out with a video called Confronting Pokemon.
Oh yeah.
And I was like, oh, confronting her, and then I watched it. I was like, oh, okay.
Yeah, it's always a bit of a letdown, but I thought it would be fun.
No, it is.
The nice thing about this channel is like it's so small and no one really ever watches the channel. You can just do whatever you want.
You know, this is our first live. I mean, we've done a lot of podcasts, but this is our first like live podcast. And I don't even think, is this going live on your YouTube right now?
Yeah, this is going live on our YouTube.
I wish we would have planned better. We would have promoted it. Didn't think to do that. We're just getting ready for podcast mode.
Yeah. We appreciate you guys coming on, especially for us in such a small, like our audience is very, very small.
There's like 28 subscribers on this channel. My channel, I take a little bit more seriously. So we could do something there. But then we'll put this on the actual audio podcast next week.
Oh, nice.
Sweet. Yeah, I feel like coming on here, we're benefiting so much just from learning all this stuff.
Honestly, that's been
That's what I love about this. Is like it's just an opportunity to talk to interesting people and have good conversations, and
Yeah.
I just like doing that every week.
And that's something I'm really happy about. The topic of finance is because people that you attract that do want to talk to you about that topic, they like yourself have like you guys, you have a lot to offer as well. So that's like another theme I keep seeing is like whenever we have these podcasts, is like, man, we're like now we've got some stuff to go work on and then like learn about. And
we get to nerd out about things that other people find boring.
Yeah.
Right?
I think that's the cool thing about finance. Is something I talk to people a lot about is everyone, especially given the current world of YouTube, like it's all like very like this is how you do it. And I'm always like, well, there's a bunch of different ways to do it. You know, people are like, what should I invest in? Well, I think you should try every single method of investing, a lot like you guys are doing. Figure out what jives the most with you and then go that route. Like for me, it's like investing in startups and starting startups. Whereas the stock market is crazy boring to me. Like the amount of time Kevin spends analyzing companies like just dulls my brain, and I can't do that.
Yeah, I hear you.
So I think that's exciting about the finance space. But cool. Well, unless you guys have anything else, I think we can wrap this up. It's great having you guys on.
Yeah, thank you. Thank you for having us. Thank you for thinking
thanks
of
for
us.
coming by.
Yeah, of course.
Yeah. We're
Cool.
gonna we're gonna put out our NFT video in the next week or so. So thank you for helping contribute to that with your ideas. That whole title idea, the overhead, that's like I said, something we hadn't thought about yet. So
cool. Yeah, and shoot me over. I'll obviously put a link to your YouTube channel down in the description if I haven't already. I think I might have already done that.
Yeah,
it was actually on top of getting this one ready.
there you go.
But if there's anything else you guys want me to link, like a video or anything like that, shoot it over to me.
And dude, we'd love to just continue to pick your brain.
Yeah.
You know,
Yeah, for sure.
Yeah, just to have more insightful conversations like this. I feel like
I love talking finance with anyone that will listen to me at any time of the day.
Awesome. Sweet.
There
Cool.
we go. Thanks, guys.
Well, thanks for coming by. As always, subscribe and like if you actually watched this video.
If you made it this far.
Yeah.
All right. See y'all.
Have a good night. Later.